We want to get to Steve Leisman, who has breaking news on the Fed. Steve.
Thank you, Morgan. We have the Fed's balance sheet for the week ending this past Wednesday, and it is up by $297 billion as a result of a couple failed banks, as a result of borrowing at the discount window. Borrowing at the discount window rose by $148.2 billion. And then this new program that the Fed launched on Sunday in order to provide par value for high-quality collateral for the banks, it rose by first-time borrowing. It's $11.9 billion was borrowed by banks from this new Fed lending facility. Half of this increase, this $297 billion, is linked to bridge loans that the Fed, when there is a bank failure, normally provides and is guaranteed by the FDIC. So this number here, Morgan, we do not know if it reflects one bank, two banks, three banks, a whole bunch of banks borrowing at the discount window. We're going to have to wait to see, now that these two particular banks were closed, whether or not this lending at the window, which can be a sign of stress or it can be a sign of banks just trying to liquefy themselves and get ready for any deposit withdrawals, if it continues into the week. But right now we know there was a good amount of takedown of borrowing at the Fed's emergency discount window and some borrowing at the new facility. Morgan?
So how does this speak to this discussion that's afoot right now about everything that's going on in banking and this idea of liquidity crisis and whether it's very serious, whether it's potentially systematic or systemic, I should say, or whether it really will be confined to just a handful? It's still too soon to know.
It's just difficult to know right now. We know there was a lot of borrowing at the window. For example, there was something like $4.5 billion of discount window borrowing in the week before this past week.
Okay.
And now it's 100 and something billion, 148 billion. So that's a big increase right there. And so the issue being, was it one bank, two banks? Was it a single bank or two banks that were trying to liquefy themselves, or was it multiple banks? There's transparency by the Federal Reserve around the borrowing at the window, but not enough to know how widespread the issue is.
Steve, what kind of a position does this put the Fed in? It's been trying to reduce its balance sheet along with get rates higher, but things happen.
It does happen. I think the key here, John, and I do need to report this end of the story here. You are correct. The Fed has been trying to bring the balance sheet down, and this is a market increase in the size of the balance sheet. The question is, how much of this money actually gets into the economy? In the sense, does it become the source of loans to the economy? And I don't think that's probably what's going to happen there. To the extent that banks borrow to liquefy themselves, it's probably not going to be something that's going to create lending into the economy. It may keep the existing lending that was going to happen in place, or keep it at the prior level. But I don't know that this is going to be actually inflationary. But it depends on what happens over time. Does the progress towards reducing the balance sheet continue after this?
All right. Key questions. More will be revealed. Steve Leisman, thank you for bringing us those numbers.